What is up, everybody? I want to do a video on price action and auction market theory. There was actually a trade. Let me pull that up for you here. Let me just pull that up. All right, so there we go. That should be right. Okay, so I noticed the profile the other day was textbook in the way it looks. So a lot of times I talk about the bell curve or distribution zone of a profile, and there's these patterns that I see happen all the time, and I try to explain them, and some people just don't quite get it. And some of the people in my trading room don't get it. So this is what I want to show you. This is a textbook bell curve. It's not, I mean, this high node right here isn't exactly textbook, but for the most part it is. So notice how this bell curve, we have the VPOC, the point of control, right? More volume has traded here than anywhere else. So what does that mean? That means this is the most popular price, 32.8450. Okay, now notice as we go lower, the volume nodes start to drop off. It almost looks like a mountain, right? So notice that the volume drops off really low around 82.50. Now ignore everything down here from 82 even downward. Ignore all that. We're looking just at this curve. Notice when we go up from the point of control, and the point of control doesn't have to be exactly dead center. Okay, it's never going to be dead center on these distribution curves. But notice as we go up, the profile kind of tapers off, right? Follow my mouse. It gets higher and higher volume. Has traded here more and more and more volume until we get here, and this is where the most volume is traded, and then we taper off. So this is the distribution curve. This is the bell curve. Same thing, right? Distribution zone, bell curve. This is what the market deems fair market value. So let's talk about this, because I think a lot of traders who look at the market in the complete wrong way and just really don't understand exactly what's happening. Now, all of you know that the markets, no matter what market it is it's an auction, right? It doesn't matter if it's a stock market, forex, whatever, futures. It's all an auction. And you're like, yeah, no shit. Okay. Well, that what happens in the market applies everywhere else. Okay. So let's take an example here. Pretend a new car comes out, right? This car company comes out with a new car. So the retail price of the car is going to be about $84.50, right? $32.84.50 for this particular car. This is the MSRP. This is what everybody's going to be paying for this fucking car, for the most part, right? However, maybe you're a shrewd negotiator. There's room to negotiate when you go to a car dealership, right? So maybe you can come in and you can negotiate for a little bit off. Maybe you can negotiate and get it for 84 even, okay? However, remember, most of everybody who buys this car is going to be buying at this price. So maybe you're a really good negotiator and you can buy it for 83 even, okay? This is probably the lowest the dealership is able to go, okay? So, you know what? You can buy it here. But not everybody's buying it here. Notice how the volume is a lot lower down here. Not everybody's a good negotiator. Not everybody's willing to negotiate. And those who do, who are really good, are able to get it for even lesser of a price. Okay? And again, this is a general population here. This is what everybody's paying. This is retail value. Now, let's look up here. So this is when you start adding options to the vehicle. You know, maybe you come in and you don't care. You want this car. You got to have this car. You need to buy this car. And you want everything on it. You want the full leather interior. You want the high-end sound system. You want every bell and whistle this thing has to offer, just the presidential package of this vehicle. You're going to be paying up here in the 8675 zone, right? So you're going to be paying more for those extra features, okay? Maybe you can negotiate a little bit less for those extra features, but just in general, extra features are going to cost more than retail, right? Maybe you got the alloy rims instead of the steel rims. It's going to cost more for the car. And then you're going to get the full leather interior. It's going to cost more. But maybe you can negotiate a little bit off and get slightly better price. So you have to understand that everybody that comes to the market isn't looking at this the same way as you are. Everybody perceives value differently in the markets. And this is the auctioning zone. This is where, when you have range trades happening, that means that the market is balanced. When you have a trend happening, that means the market is not balanced. So you have ranges and then you have trends. So this is what a nice range looks like. And it's honestly, give me just a second here. I coughed and want to do it in your ear. But honestly, when you trade the futures market, the bell curve, it's very rare. You get it's not very rare. It just doesn't happen that often that you get a beautiful bell curve like this. The thing is, this bell curve's not perfect, so it's going to trade a little weird with this high node here. So the more choppy these volume profiles are, the more awkward the price range is going to trade. However, this one's very beautiful in appearance, and I'm going to show you a trade off of it, actually. I'm going to show you a trade on it and how smooth it works because the bell curve is so smooth. This is a no-brainer trade, by the way. This is a very easy trade. But I want to continue talking about this auctioning process and the market participants. Again, when people go buy a car, some guy wants maybe the best price possible, so he's going to pay down here. Maybe somebody goes there, they don't want to negotiate, they just need a car, and they're going to pay retail. So that's most everybody, and they're paying at $84.50. This is more volume is traded here, so more transactions have happened here. It is the fair market price right there. Now maybe somebody really wants to buy this car. They want everything on it. They just want it. They don't care what they're paying. They're going to be paying up here. Same thing in the markets, okay? Same thing in the futures market, stock market, whatever. Everybody you're trading against, they all have different perceptions of value, okay? You say, oh, I want to buy low, sell high. Yes, you do, but everybody's looking at the market in a complete different perspective, okay? You got institutional traders who are looking at this at a bigger, longer-term picture, and then you have your short-term traders who are like me, and they're just taking micro scalps or taking scalps, and they want to jump in with these momentum trades. You got swing traders who are wanting to hold it over the course of several days. And then you have investors who are going to hold it over the course of several years. And everybody's perceiving this at different areas as a good value, right? Everybody's looking at this. Everybody's got their own speculation. What I think is a good price, you may not think is a good price. So keep that in mind. However, the auctioning process currently right here, this is the fair market value area. The whole thing, this is the fair market value price, and we're going to auction up and down through here. And the thing is, this is a range trade. So let's draw a picture. Okay, so here, oops, that's not what we needed. Didn't really, here we go. So here's your profile, right? This is kind of like what we just looked at, okay? And this is the VPOC, the fair market value area, okay? And this is the edge, and then it kind of goes off like that, right? So we'll go ahead and mark where the edges are, because This is important to understand this when you see this trade I'm going to review. So what's going to happen here is, you know, the market is going to trade kind of like this, right? Okay, that's kind of like what a range trade is, right? And if you drew a line from here to the center point, notice how many times we're crossing the center point, right? We cross the center point 1, 2, 3, 4 times. Whereas if you look at the outer edges, we've only touched the outer edge twice here and 3 times down here. So we've crossed this center point more times than we've touched the edges. So therefore, that's why you're going to have the curve shaped the way it is. That's why it's a bell curve. That's why it's shaped like this. When these range trades, this auctioning process is happening, you're crossing this area multiple times, and you're crossing it a lot more times than you are touching the edges. So that's why naturally more volume is going to be in the center of these bell curves. Now, it doesn't always look like this at all. It doesn't just trade like that. There is a particular pattern I'm going to share with you guys that happens day in, day out. Okay, and it has high probability of working out in a particular fashion. Okay, so if we come up into this bell curve, right? Oops, let me pull this out. And I'm just sort of winging this, so just bear with me. Okay, so say we come up into this bell curve. We touch the outer edge, so we're touching up here, right? So if you come into a bell curve area or some distribution zone, and the trade goes all the way across it like this, and you'll see that sort of price action, it's going to pull back in, and it's going to touch the point of control. One of two things is going to happen. It's either going to bounce off the point of control, and if it does bounce off the point of control, there's a high probability that once it gets up to here, it's going to come through by a few ticks, and then it's going to get rejected. Notice we're crossing this line right here. We're crossing this threshold, okay? That's the market auctioning, and these are buyers trying to explore new areas, okay? Now, the thing is, when we get up here and we're crossing this ragged edge of the profile, so if we're crossing into this 3287.50, you can barely see, that's sort of unexplored territory. I mean, it's been traded, obviously, but that's the market trying to come out of the fair market value area and is trying to seek higher prices. Now, the thing is, sellers are seeing that there's a lot of demand right here. So sellers are going to step up and just start flooding the market with supply. And it's going to come up by a few ticks. And generally, when I see this sort of price action, if I see it, and this is my secret sauce, if I see the price cross a curve like this, and it comes back down, touches the point of control area, sometimes it can come back down in here and it'll kind of chop around on the point of control and bounce. And then it might pull back again and then touch the point of control again. But if it comes back up here, whether it does it very smooth like this or you see this more choppy price action, it's not a set pattern. But at the same time, it kind of is. There's a high probability that we come up from here by a few ticks, maybe 1 tick, maybe 2 ticks, usually around 1 to 2 ticks. We come up here, and then it's going to pull back in. Once that pullback happens, there is an 80% chance that we're going to test the bottom half of this distribution curve. So it could come back down, it could go all the way to the other side, or it could come back down and maybe chop a little bit. We get a little pop, and then we get a little one of these, and then it chops. But there is an 80% chance it's going to come back down here. Now, just like what happened up here, oops, let's fix that. Hold on real quick. Try to fix this shit. Okay. So, again, we were up here, right? So, now we're coming back down. And again, we came up here, tested, bounced off the point of control, came back up. Pardon that for not being smooth. We came up by a few, like a tick or two. Sometimes it can be a little more than that, but generally I'm looking for a stall around a tick or two. 80% chance we're going to come back down to the other side. Okay? Same thing can happen here. Now we're going to start to test the bottom half of the profile. We're going to test down here. Okay? And this is very important for this trade I'm going to show you. What's going to happen is it's going to come back up to the point of control. It may do its thing. It may come up a little bit. However, something's going to happen, or we can just come up, bounce off of it. But again, what's going to happen here is we're going to come down and we're going to go through it by a tick or two, and then we're going to come back in. So this is going to happen on both sides of the distribution curve. So let me simplify this for you by drawing sort of a simpler price action chart. And again, I watch my charts on like 7-second intervals. This is going to be a lot harder to see happening on a 1 minute. Okay, so keep that in mind. So here's what happens. You come up, you're going to come through by a tick or two, 80% chance you're going to come back down. Give me just a second here. Let me redraw that. So we come up, bounce, come back to the point of control, come up by a tick or two, come all the way to the other side, gonna bounce. Oh, hold on. I'm sorry. Let me draw it again. Bounce. There we go. That looks better. Bounce right here, test the point of control, come by a tick or two. So this particular price action you're seeing is going to happen a lot, okay? Again, it can kind of like chop around and maybe pop out a little bit here and there, but overall, this is the general price action pattern. It's going to happen like this. It's not going to happen perfectly like this. You're going to have some weird chopping action, but overall, there's a high probability you're going to explore the outer edges of these distribution zones. And what's going to happen is it's going to pop up but not go as high and then come in. And then what's going to happen is it's going to start to wind up like this. So those of you who are technical traders, you probably notice this might look like a pennant or a wedge pattern. And that's exactly what is happening. You just don't understand it. You don't understand the order. You don't understand the profile structure, the auctioning process. You don't understand why a wedge pattern or a pennant forms. This is exactly why this happens. And what happens when a wedge pattern tightens up? It's going to explode, okay? So we're going to have this nice wind up like this. I'm not sure if I have a photo of something like this happening. I would like to show you guys, but I don't know if I have a photo. Anyways, what's going to happen is it's going to explode in one direction or another. Okay? And it may not just go. It may not just rip up. Okay? It may be a steady kind of like something like this, you know? And this is where you're kind of looking for the breakout. I mean, we've tested the high twice. We've tested a low twice. If we're testing it for a third time, what happens when you, and again, the edge of these profiles, this is your support and resistance. So when you're looking at the edge of the profile, this is your support and fucking resistance zones. What happens when you tap a support and resistance zone multiple times? It gets weaker and weaker, and eventually it's going to break out. So that's what you're kind of looking for. Now, you just don't go long at the top of the profile. It needs to cross a certain threshold. Okay? For instance, if I was to short this, I'd want us to like get through this 32.82 even. Why? Well, first and foremost, the VWAP is here, and then there's another smaller distribution zone right here. So it looks like this bell curve, but it's smaller. I want us to start to get in here, and I know this point of control is going to act magnetic. Again, these point of controls, they act magnetic. That's why you get this back and forth motion, and that's why the point of control, you know, that's why the most volume builds up at the point of control. Again, that kind of wind up you see on a wedge pattern, that also contributes to why there's more volume right here. But you don't need to draw fucking wedge patterns to see this happening. That's why the profile is beautiful. And again, your order flow is very important. You know, this, you know, by the time you're seeing a wedge pattern happen, you're missing really good opportunities to take range trades. That's all I can say. Anyways, I'd want to short it around here because if we get through here by a little bit, there's a high probability it's going to pull back in because now all these sellers are flooding the market with supply that buyers are seeing this as really good value. Remember, this could be a car. Maybe these cars are like, it's 2020 right now, right? Maybe the 2019 models are going on sale, so they're coming down to like, say, this price. They need to move the fucking inventory. So they're they're dropping the price. Buyers aren't buying, so they continue to drop the price, and then maybe right here at 32.82.25, buyers just rush to the fucking dealership because they see it as a fucking really good value. And then all of a sudden, what happens? It pushes the price back up. So you have to look at it like that. This is an auction. You got to look at it like that. And now there is these patterns that happen in the price action as well. And I'm trying to share that with you because you can capitalize on it. Now, the thing is, I would deem this a perfect profile as how many ticks it covers. Okay, some of these profiles, let me draw a picture for you. Some of these profiles can be freaking massive. These bell curves can be fucking huge, like that. And then this is the one I have, for example, on the other screen. It's about this size, right? And then sometimes it can be really tight and small, much like the one down here, right? The risk to reward just isn't worth it there. To try to play an edge of this little profile, and it's not that big, so it's not as strong. So your bell curves, your distribution zones are going to be different sizes. They can range from very large to the perfect size, to small, to even smaller. And this is a perfect size for the ES. The problem is if they're too fucking big, okay? The problem if they're too big, your price action is going to kind of like look like this, right? You're going to have those moves I talked about, and then it's going to come up here, and then it's going to fucking range trade here, and then it might come up and range trade here, and then all of a sudden we come down here, and then we start range trading here, and then we move down and we start. It's very difficult, okay? It's going to, when you have a very large profile like that, you're going to have these range trades. That price pattern I talk about, that I showed you where there's an 80% probability of this happening if this happens, it's going to be harder to do on a larger bell curve that covers multiple points. Like, for instance, if this bell curve went from the top of this screen all the way to the bottom, you're going to see this weird price action happen, and it makes no sense. It makes sense, but it's going to make no sense. Like, I've watched these screens for so long, so many years I've watched this, that I understand all of the price action. I understand, and that doesn't necessarily mean I'm going to make money all the time. You know what I'm saying? Because depending how the profile is set up, maybe you have a nice bell curve. Maybe you have a nice bell curve. Wait, give me that. Where's that? So it looks like this. Here's your VPOC, but then when we get into the top half of the fucking bell curve, it kind of looks like, the volume nodes are all fucked up like this. The price action, it's gonna fucking get hung up on these random high nodes, and just that beautiful pattern's not necessarily gonna happen as it would on a more uniform bell curve like this one. So you have to understand that random high nodes and low nodes, it's like driving a car over a speed bump. The bigger the speed bump, the slower you have to go, right? So, for instance, you'll see it in this example. This 3286 is going to hang up the price action. This is a larger node. It's going to act like a bigger speed bump on the price action, okay? Now, the thing is, with these lower nodes, why are they support and resistance? Why are they so low volume? Low volume nodes means the market doesn't trade that price, and it's not a popular price because less volume has transacted there. This is a more popular price, more volume. Okay, so it's going to trade here. So when you're getting these pullbacks, you can capitalize on these pullbacks and at least try to get out around the point of control because it might bounce, or you can definitely anticipate touching it. Now, don't just try to trade what I'm telling you. It's not that simple. None of this is as simple as I'm making it seem. There's a lot of nuances. There's a lot of trickery. And then, quite frankly, your profile is never beautiful like this. Now, the thing is, that price action I was talking about, okay? This happens all day, every day. So remember, we have the test up here, test a point of control. We're going to top tick. We're going to come by a tick or two. We're going to roll over, 80% chance we test the other side, pull back in, come in, bounce out the point of control, test by a tick or two. Sometimes it can break, and then we'll pull in, and then it should start to wind up like this. Okay? This type of price action, this type of movement happens all day, every day. It can be, remember how I was talking about those range trades on larger profiles? Like, you notice how I was telling you that the range can be established at multiple price levels within a large profile? Like that earlier example I showed you, pretend this is a fucking profile that covers many, many, many ticks. There's your point of control. You're going to get that fucking, you're going to get this sort of like price action, and then it's going to pull up and kind of do this, and then it might come back down and do this, and it might come back down and do this, and it might do that on a larger profile. Okay, so now that we're on the same page, this is why you want it to be about this size. This type of price action I showed you right here, where we test by a tick or two, 80% chance we're going to come to the other side, and generally that's a very smooth move. It's going to pretty much just go all the way through with minimal resistance. You're not going to get this sort of tighter consolidation. So generally, it's going to move all the way through relatively easily and quickly. And you're going to see that in this example. And then again, we test by a tick or two right here, and then it's going to come up, and then it's going to tighten up here, and then all of a sudden you're going to just have a fucking move out of the distribution zone, and then we go find fair market value somewhere else. And then we build another bell curve. Okay? This type of price action happens exactly like this. It can happen over the course of maybe 4 ticks, and it'll wind up like that. Or it can happen over the course of several points, and then it'll wind up like that. This type of price action, where you have these 1-tick tests and turnover from the previous test, happens all day, every day. And it can happen on a very small few tick scale, or it can happen over the course of multiple points. And the thing is, when you have one of these large fucking distribution zones, this price action I drew within this area, this mess right here, everything I drew in here is basically what's happening right here. It's the same sort of price action you're seeing in here, but it's almost like Elliott waves, I would say. I don't remember exactly what a fucking Elliott wave looks like, but that's almost, let me look up an Elliott wave actually. That's almost exactly what's happening. I'm going to look it up just for entertainment value. Let me look at this thing. That's not quite. It's not quite exactly like an Elliott wave, now that I'm looking at it. It's not anything like an Elliott wave. I don't know if Elliott waves are like more longer term stuff. I don't know if it's better for, but no. But it's almost like an Elliott wave. This type of price action in the ES at least happens in here. So what you're seeing here, even though I didn't draw it perfectly, is the same thing in this circle. And what you see here, 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 and here. So what you're seeing in this bigger black circle is the same type of price action that you see in each one of these circles across the board of a larger profile. Okay? Again, what you're seeing in the larger circle, it's not going to happen exactly like this, but you're going to have, these are where you're looking. You're looking at these zones right here. You're looking for it to have test the bottom half of a profile, and then you're looking for that next test, and you're looking for it to go through by just a tick or two. You're looking for that stall, and you want it to roll over. Now, the thing is, how do I know if it's going to break out or not? Because you probably want to know. So here's that test, okay? Say, okay, this is where you're looking, okay, it might, this is where I want to consider a short. Okay, so I take a short, right? Because there's a high probability it's going to the other side. But if I start to see this, and it starts to happen, and it's staying embedded up here, that to me is a sign this is going to go through. I'm probably going to get out for a minimal loss or scratch. I'm not going to buy it just quite yet. We need it to cross into a certain threshold to where the bell curve, the distribution zone doesn't pull it back in. Because again, this distribution zone is like a black hole in the universe. It's very highly magnetic, and it wants to pull this price back in. And I need it to get a little further away before I decide to buy right here. And then, boom, it goes. So, on that note, I know this is a long video. Here's something else that can happen. You can have two distribution zones, one on top of the other. Okay, here's your two bell curves. You got your series of low nodes there, and then you have your other So there's your point of control. There's your point of control. I know it looks like a bird's eye view of a pair of tits, but for the sake of seriousness, this is what it is. Here's the bottom half of your fucking bell curves. All in here is low nodes. There we go. So you'll see this sort of thing happen, and generally you have two distribution zones. You'll have days like this, and what's going to happen is, say we've been trading up here for a while, right? We start to get down here. Here's that line. Try to draw it as, so I wanted to cross to about here. I want to see some embedding, and then I'm going to consider a buy because I know it's going to go into this distribution zone. And once we go into a distribution zone that's been established, there's clearly a profile there. Generally, you'll see this later in the afternoons when the profile's been established. Or maybe we're trading into an overnight area. But I'm going to consider a buy because we're crossing these very low nodes. Maybe there's a very, very, very low node that stands out right here. Once we start to cross that by a tick or two, I'm going to buy it, or sell it, I should say, short it. And then usually I want to get out right around this point of control. And what's going to happen? What's going to happen here is we're going to bounce, right? But what can sometimes happen is we bounce, we test the point of control again, and we bounce and we come up. And then we're starting to cross where these low nodes are. Okay? And then we bounce off the other point of control, and it's called point of control ping pong. And then we start bouncing off these point of controls. Then we start to wind up where this low node was. And then what starts to happen? A lot of price action happening here. You start to build up and fill in those low node areas, and then you make one giant distribution curve. And that happens frequently. And trading between two different distribution zones, it's a little trickier. It's not like this example where it's kind of just one sitting there. It is, if you got two that are very close to each other, this can start to happen. And then boom, before you know it, you have a large profile, and then you start to get these weird range trades that happen in different sectors of it, like I was showing you previously. And generally, when you cross this low node, generally it's good for the short just the one time, and then you start to have this wind up like this. And then it just starts to get very erratic and unpredictable. But for the most part, that pattern is predictable as far as filling in this area. And that's point and control ping pong. I'm sure there's a way for you to see that price action. You could probably find opportunities in it. Personally, I don't like to really trade them until we cross the low node first. Hold on real quick. Anyway, so again, what I was saying is, generally when this happens, if we're embedded up here for a while, generally a good play is to take it right here and short it, and then just don't trade it when it starts to do this shit. So keep that in mind. It could eventually break out of the point of controls. So you have these two point of controls. So what can happen, and I'm just kind of showing you everything I know about price action. Well, not everything, but I'm showing you things that hopefully help you understand what's going on. So you have, so let me redraw these two distribution zones. So again, you're going to kind of have, you know, that chop in the center of it, right? You're bouncing off the 2 point of controls. Now the thing is, when we cross this point of control right here, you know, once we stop playing point of control ping pong, what's going to happen is we're going to have a test at the lower half of it. We're going to come back. We're going to probably chop, or we might just have a clean bounce. But what's going to happen is when we start to come down here, what happens? We come through by a tick or two. What am I going to do? That same price action I showed you, 80% probability, we're going to come back through and test the other side. So I'm going to go long here. So generally, I wait for my trades on the profile at certain areas that I know are high probability. So, I mean, you can have this chop up here. It could come down, test. You know, it could come back up here, and then it could do a clean bounce, or it could chop like this. It could be just a clean bounce. It can do all sorts of weird shit, but the thing is, I'm waiting for it to come to where we previously tested down here. I want to see it come through by a tick or two, then I'm going to take the trade. Why am I going to fade the move? Because I've tried to play breakout trades and off of these types of moves, and let me tell you, there's a fucking high probability that you're going to get ran over by trying to play the breakout. You have to see certain things happen. You need to see it, test it more than fucking twice usually. And again, that bell curve is like a magnet, okay? I've been ran over so many times trying to always play breakouts out of distribution zones that it just makes sense to put the odds in my favor and be the casino and actually fade the edges of these profiles. Because again, there's an 80% chance it's going to work out in my favor. That means, I mean, statistically, it's proven. Okay, this isn't some number I fucking came up with. This is other auction market theory guys have came up with it. Is it true? I don't fucking know. But it definitely seems pretty true. So, and the thing is, I think when you have this sort of price action where, you know, you have the bell curve, right? You have the bell curve, you have your test down here, you have your bounce, you have your test right here. I think a lot of traders are going short right here, and I think there's a lot of stops being put right here. Okay, so there's a shitload of stops being put in here because we broke the previous low by a tick or two. And then that's why I think that it just moves so easily to the other side. And you're going to see that in the trade example. Again, 80% chance that it's going to go test the other side. Now, it could come up and it could like maybe chop it around in here a little bit and then go, or it could just be really smooth. But I think it's because a lot of traders are putting stops right here, and that's why you get that clean move to the other side. So what I'm going to do now is I'm going to show you the trade. I want to bring it over to this screen. Okay, so give me just a second here. All right, so there's also other things that you got to kind of look at other than everything I showed you. This is a high volume edge. There's 1,459 that traded here versus 7,933. So almost double the volume has traded on this node. And when you have these higher volume edges, that's what this is called. Notice how it just sort of falls down. It's not like a smooth... It's not like stairs. It's not like a smooth progress up. Notice how all these volume nodes are somewhat relatively closer. Like this one's slightly smaller than this one, and this one's slightly larger than the previous one, so on and so forth. Right here, it kind of just falls off. It's almost like a cliff. Okay, this is going to act magnetic. Okay, anytime you hit a high volume edge, and it's not just a random high node, okay? It's going to be a series of higher nodes, and then boom, we fall off to a series of lower nodes. That's where a higher volume edge is located. It's not like this. This isn't a high volume edge just because it's slightly larger. This is a high volume node. Okay, again, a cluster of high volume nodes, and then we have a noticeable drop off to a cluster of lower nodes. That is your high volume edge. This is going to be very magnetic. Now, just because we trade in the 83 doesn't necessarily mean you want to go short here. It's going to keep pulling back in, and yeah, sellers are going to try to get out of it. I want to see it trade between 83 and 82.75 before I begin to get confident that it's going this high volume edge isn't going to act magnetic. In fact, I rather it trade between 82.75 and 82.50 between these two ticks before I'm really confident that it's not going to pull back into this high volume edge, because it could come through by a tick or two and then just pull back in. So I'm not looking for that breakout. But just the way this particular profile is structured, we have this high, we have a low node here at 82.25. This is also going to this is my ragged edge of this bell curve. This is definitely going to act as support. And then you got this high node here, and that's going to get the market hung up. Again, it acts like a speed bump. So really, for me to hold a longer term short, I need to get to 81.50. And this is exactly what longer term traders do. Okay, if a long-term buyer doesn't buy the bottom of this fucking profile and then wait for the breakout. Okay, longer term buyers are buying near the high of the profile. And if you watch my older volume profile courses, they're not courses, whatever. My older volume profile, I don't know if it's how to read volume profile part 1 and part 2. I don't remember the exact names of them. There's some of my older videos. They're in a playlist, tools on how to read order flow or something like that. I'll link them in the description. But I talk about this very same thing. Okay? Longer-term buyers are buying up here. They're not buying down here. Short-term buyers are buying down here. Okay? Guys like me are buying down here. Okay? Institutions are buying up here. Yeah, they could buy down here. Okay? But really, your longer-term traders are buying up here, and that's what's going to cause the push out of this distribution zone. Okay? So for this example, notice this. High volume edge, we got size sitting on it. 416, notice there's size that's been sitting here. So see this little gray line right here? That means I just turned the computer on at this point. So a lot of the data back here is missing. So when I came into this, I fired the computer up. And I'm like, wow, this bell curve is perfect. Generally, I don't take a trade as soon as I fire the computer up. I literally fired the computer up in the middle of, hold on real quick. Okay, so sorry about that. So what happened was I fired the computer up right in the middle of the afternoon. I was busy during the morning. I have no context of what's going on in the trading day. And generally, I don't take trades immediately. I have to let the price action play out so I can get a feel of what's going on. And then I have to look at longer-term profile charts. But as soon as I fire the computer up, I'm like, holy shit. This volume profile bell curve is fucking perfect. And I'm seeing size sit here. This is a high volume edge. This is a fucking no-brainer of a trade. This is screaming go long. Watch this. Lower volume because it is in the afternoon. Okay. And I've been wanting to do this lesson for a long time, but now I finally captured the perfect profile and took a trade, and I get to give you this example. And this is what I needed. Notice that large size on the tape, 233 come in on the tape. Okay. Again, pretend it's the 227. Again, yes, sellers are somewhat absorbing that. Sellers fight back with 110 on the tape. But it makes sense to go long here. And if it doesn't work out, I'm just going to get out. But there's a high fucking probability. And that's the thing. I didn't know how many times this thing has tested. Okay, that price action I usually look for, I'm missing that right now. again, when I turn on the computer, a lot of this data on the heat map doesn't start. I can't see it until I turn it on. So it's all missing. It's not like looking at a chart. That's just that's how Jigsaw works. So I'm taking it. It just looks good. It's a high volume edge. I got size sitting here. You can see that my footprint isn't really that large because I just turned on the computer. Let's just wait. It is a slower trade. So, like, I'm considering to get out right there. So I put in 6. I'm trying to work out at least 3. Because you kind of have some size that's coming in right here. This is right, and then I put another 3 up there. And the thing is, there's some size come in here. It could very well bounce off this point of control, and then we could have a further test down. I just don't have the context of what exactly has happened, so therefore I can't really hold on to profits because I'm missing a lot of the puzzle piece. I scale out 3. So notice that we kind of come up relatively easy into the point of control. So remember those squiggly lines I was drawing in that paint? We got a slight bounce off the point of control. We're getting a little chop under the point of control. I'm going to fast forward a little bit, but we're staying up here, which is nice. Oh, did I pull out of that trade? Yeah, so what I do is I end up taking off the rest of this trade right here because I don't know if that bounce off the point of control and the test slightly lower has happened or not, and I know that that particular price action could happen. So this is why I'm getting out of it. But the thing is, we're going to fast forward it. And it was a good trade. But notice this, you notice, look at that. You got a little chop right on this point of control. So we chopped on the bottom half of the point of control. Now we're starting to chop on the top half of the point of control. That's a good sign that it's going to go to the other side of this profile. When it starts to chop on the top half of a point of control after a move like this, after a test of the low of the profile, that's a good sign. And usually you'll see size come in around the point of control. It's large traders love to transact right there. So a lot of what you see in the order flow, a lot of these large orders you see kind of on the point of control, you have to sort of discount because it's natural that large traders are going to transact there. When the tape and the order flow becomes more important near the edge of these profiles. And we'll get a good glimpse at that. So, again, it's low volume, but so there's this large node. Notice how the large node is kind of holding it in. And this is how I was talking about this acts like a fucking speed bump. So this isn't a perfect profile because of that. But notice that move overall. Yes, we have this chop and shit and this back and forth, but notice how we tested the bottom of the curve. Now we're going to the other side of it. And look at this 724 right on the ragged edge of the curve. Okay? So notice how this higher node right here is acting as sort of a magnet. It's going to be temporary. It's not going to hold it forever. Okay, but I know that, and I expect this to happen, this sort of sideways consolidation. Well, we're trading on the upper half of it, which is good because the market's trying to move away from it. Generally, it'll chop between 86 and 85.75, and then it'll move through and start to chop 86.25 and 86 even. Kind of what happened on the VPOC. We chopped the lower half of it right between these two prices. Then we started to chop the top half, and then we started to move away. But if you look at that price action, this is exactly what I was drawing. And this happens every day, all day. Whether you have a perfect bell curve or not, that's the thing. And you can, with this type of price action, you can know when a small range is being established, and you can exploit opportunities, even if the profile isn't developed yet. So keep that in mind. You can use that price action I was drawing, and you can identify where these profiles might build up. Okay, just because there's no profile there, maybe it's the new high of the day or new low of the day, and there's no profile there, you can use this sort of price action to kind of determine what's going to happen, and then you can take trades based off of it. This is the pattern I use. Okay, this is my go-to pattern, my go-to price action, whether it happens on a perfect bell curve or not. This type of price action is what I use to take some of the best trades ever, and that is my go-to price action. There's other things too, but... So again, I'm going to fast forward a little bit because this is about looking at the price action. So what am I doing? I'm taking a short. Why am I taking a short here? We got large size sitting here. This is a high volume edge. Okay? Got 1,000 stacking up there. Over 1,000. So here I go. I'm going to get the fill. I don't think I'm going to get the fill here at 517 because that's still a lot of size. There's a high probability this might pull back in, but you know what? It's not. It's going to actually break out right here. So this is what's cool about this whole setup is you're going to see us break out of this distribution zone. So here I go. I'm going short, but I'm only doing 3 because I'm not quite sure what's going to happen because I'm missing context from previously. Get the fill. Now it's starting to go against me. The size is kind of tweaking around. Notice how we have a smaller little distribution zone here, and then the profile picks up. So this is like a small bell curve between, notice the low node at 89 even, and then we got this low node at 87.50. This is us transitioning into a smaller distribution zone. So it's no different than this large bell curve. It's just smaller. So I'm holding steady. The size is pulling off. That's not good. Buyers are getting aggressive, 267, so I'm seeing larger buying on the tape. This is where my long-term buyers are stepping in to push us out of this distribution zone. Sellers fighting back as they should. Buyers hitting back in. And again, a lot of this large size started to pull off. That's a sign. Order flow 101, that's a sign. When you see size pulling away, that means it's probably they're getting out of the way. Sellers are getting out of the way. You can see on the tape that large sellers and buyers are taking hits at each other. I'm willing to hold this trade till about 88 even because it's a higher node. It should theoretically kind of hold the market down. You got 451 coming in on that high node. Problem is I'm getting large size stacking up right here. Notice I'm typing in risk. Wow, this video is amazing. Risk, that means I'm getting out here. And instead of doing 6 like I did down here, I only did 3. So I'm scaling down for this particular trade. Got 500 there. That's good. Sellers are willing to defend, but how aggressive are buyers going to be? How aggressive are buyers going to be? Here we go. You got 230 that came in on the tape. Right there. That means they completely cleared out what was on the ask right there. Not good. We're in my risk zone. And while these bids aren't obscenely large, they're still pretty nice size. They're pretty stout. There you go. Time to get out. It's on my risk. More aggressive buying coming in. That is us getting out of our distribution zone. Notice that. You got 400 that came in right here. Yes, there's 800, but that shit, they kept moving their defense back. Notice the sellers had size here. They moved it back. They moved it back. They're moving it back. Buyers are in control. We're done with down here for now. And unfortunately, I may not get my fill. The size pulls off. That's good. I'm getting out at my risk zone, and that's okay. That's okay. Now, I do take another trade in here. So we're kind of looking for this price action, okay? Let me fast forward it some more. Notice how I go long here. Why do I go long here? Because I know we're out of this distribution zone. Notice how volume is building up right here. So what I can see right now is a bell curve building up from between here, this 88 even, and all the way up to this 91 even. Notice there's only 81 contracts that traded here. I can kind of see us putting in a distribution zone right here, even though the volume profile doesn't show it. And just the way how we have large size sitting here and right here with several ticks of small smaller orders sitting in between these two larger orders, it just, that right there is typically a telltale sign. This is gonna, once this gets cleared out, because again, we're getting embedded in it. Remember how I drew on in the paint that if we start to get embedded near the edge or some size like that, it's probably going to break through. That sort of thing is happening right here. So I decide to, basically I take a small loss and then I get back in and reverse it. I know we're not going to pull back into this distribution zone. That's completely over with. We're on to exploring new prices. So let's see if we can't. And I got this 475 down here, and I'm going to be risking it to about down here, which seems like a lot of risk, but just and look, you got size coming in. Originally there was size here acting as resistance. Now size is coming in as support. So, maybe I would hold it to here, risk it here. I mean, that looks like a better risk zone. I don't want to see it go through here. Size does pull off. That's not good. Gonna fast forward it. Here we go. There we go. That's what I want to see. Okay. Watch this. Watch this. Again, we're really embedded up here. We're really tight right here. Boom. Notice that size clears off. All of a sudden, large size comes here. This almost looks like a spoof. This size cancels. This size comes on. This almost looks like a spoof. So I have a spoof video. I'll put the link in the description. Go watch that. That's a good sign this thing's going to get boosted up. I'm like really happy about this. I have all this size defending my entry. It's not going yet. The problem is it's lacking aggressive buying right here. But usually this very low volume bullshit right here that you're seeing, usually there's going to be an erratic move, and that's what you just saw. Notice you have cluster of buying. Buyers are trying to sweep out multiple levels. When volume is like stopping at a critical area, you're going to have an explosive move. What am I doing? I'm trying to front run this high node that's also being defended by size. There's a high probability it's going to bounce right there. Actually, the way I scale out of this trade is pretty good. So kind of stalling here. I want to see it push through. It's not quite doing that. I have 6 lots on. I'm long 6. I'm taking off 3 right here. So I'm trying to work out 3 right here. I'm ringing the cash register. And up here is BOTUS. Again, I'm a very short-term momentum scalper. This is just what works for me. You may be a different type of trader. Now I'm starting to get size build up right here where I want to exit. So I'm not willing to fucking hold it because this just is lacking what I need. You have these large clusters of buys coming in, but they're not getting through. So sellers are absorbing up here. So I'm taking it down again, trying to work out right here. And good thing, because what does it do? It drops in. So let's look at the price action here. Okay, now check this out. Remember that pattern I drew? Look, we have a test up here. We go to the other side, we have a test here. So what's going to happen? It's going to either bounce right in here in tests lower by a tick or 2, or it's going to come back up here and test by a tick or 2. Let's fast forward it. So that's kind of not a good sign, but notice, and while the bell curve isn't there, to support it, this price action does make sense. So generally, you want to see that price action I drew on a perfect bell curve, but this type of price action happens outside of bell curves. Test up here, test at the center line right here. Look, we come through by a tick, 1 tick exactly. The problem is you got these higher nodes here, so theoretically it's going to be trading in here. So you have to throw that context in with this price action context. So it makes sense. It makes sense while it's doing what it's doing. I'm not sure where it goes because I do cut the computer off shortly after this. There it is. And I do cut the computer off right there. Man, I need to get that for you. But notice we do come down by about 2 ticks, and then what happens? Boom. And the thing is, the distribution zone, it's actually being built right here. So you have a small bell curve between 87.25 and 89 even. You can see the sort of smaller curve. And this is sort of this low node against this high node. It's going to act as resistance. So this, just trying to read the profile right in this zone and the way the price action's trading, it's more of a trickier read. And it's not as textbook as what we saw happen down here or what I drew. So you have to kind of consider all of that and just put it together. And just the way this price action is, it makes sense. So, you have the test here, and then boom, test of the point of control. It comes down and it's getting stuck down here, but naturally it's going to get stuck down here because these are higher nodes. And then we come through by a tick. What is this tick test? It tests right against this high volume edge, which again is the edge of this beautiful bell curve. So it makes sense that what was once resistance is now acting as support. And then boom, we get rejected and come back up. And we start testing the higher end of this smaller bell curve. So hopefully that all makes sense to you. It makes sense to me, and I tried to explain it in a way that it would make sense to you. And when the bell curve looks like shit like it does up here, it's a harder read. And sometimes you don't realize that a smaller bell curve is being established, and that's what happened. You know, if we go back, you know, it just like that little bell curve that was here isn't here. It's not as noticeable, so it's a harder read. It could have traded up here. It could have built a bigger bell curve, but it didn't. So it's just these nodes are so fucking random and weird looking, and then you got size trapping it, so that's going to create larger nodes in certain areas. So you have to take all of it and put it together, and that is how all of this fucking makes sense. That's how it makes sense in my mind. This is why price action doesn't seem random to me anymore. It makes sense why certain things happen in certain areas, and really you want to find that perfect bell curve. You want to find that area where it makes sense that it's going to just move so nice, and the risk to reward here is so good because I'm only going to risk a little bit, like maybe to this 82, even for a potential move all the way up here. Yes, I got out because I didn't see the context previous to this trade, but it just looks so good. And the thing is, despite being up here, we do come back into this bell curve. We do start to trade back here. And what's interesting is the volume up here starts to build up. And then this bell curve starts to get enlarged, and this whole distribution zone starts to get bigger, and then you have that weird range trades happen in random areas of it. And these bell curves, what you see here is going to eventually evolve through the day and start to change, and the rules and principles for this type of trade eventually go out the window, and that opportunity is no longer there because it's changing. Hopefully you guys enjoyed this and learned something.